So, David Weaver, welcome to the Disenfranchised. How are you doing today?
I'm doing great. Nice to be here, Ed.
Good. Yeah, it's always nice for me to speak to somebody from the other side of the pond. You always have such great accents, and but the other bonus really is that the US market in franchising always seems to be a few steps ahead of the UK. So it's always a great opportunity to learn. I feel so. Really appreciate you being here today, David.
Thanks for having me. I'm excited to get into our conversation.
Excellent. Well, let's get started then with my first question, which is always I love to find out what people's first jobs were.
So, first job, I would say first impactful job was an internship during college, right? So, I went to the university, Indiana University, studied business, and I was one of those kids that kind of took a while to gain my momentum in school, and so
Yeah.
took an internship so that I could, be gainfully employed with General Electric. So, General Electric's a big company. They had a really great program, and I did that internship for about 6 months, and it was basically sales and project management kind of a internship. But the purpose of that was to get into a management training program, which is the real target, um, which was super cool. I was really excited about it. Um, Basically, GE would put you into different business units for 2 or 3 years and then move you. So you would do sales for 2 years, then you would go to finance for 2 years, then you would manage a manufacturing facility for 2 years. So I really wanted to do that.
Yeah.
And dating
Cool.
myself, I go back to early 90s, right? Um, and back then, the US was going through kind of similar cultural stuff that we're doing now. And back then, it was called affirmative action. So I didn't get the job because I didn't fit the profile, and GE's a big company, and they were following these affirmative action protocols and whatnot. A friend
Yeah.
of mine got the job because he did fit those profiles, which is fine. Once I got over that little hurdle, I decided, you know what? I don't need GE to do this. So I went out, I changed my whole career trajectory in just my mental outlook, right? And I kind of look back
Yeah.
at this in hindsight is that's really when I became an entrepreneur because I was like, I don't need corporate America to give me these experiences. And that was my career track. So first
So
job
how
was
old
a
were you at that
project
point? Sorry,
I was
how
in
old were
college.
you at that point?
Yeah, I was in college. I was a senior, but senior first year. No, I was interviewing basically when I made this decision because I did the internship in my junior year. So senior year, you're going through the interview process and kind of trying to get a job. And this was in the early '90s, so the U.S. was going through a recession. So getting a job was tough, and you needed some strategy. So I would say that that was my first job that kind of I didn't really realize it necessarily, but I executed exactly the plan, which was pretty cool. Um, Looking back on it, so that was my first job. General Electric taught me how to be an entrepreneur rather than a corporate executive, and thank them for that.
That's pretty cool. But for someone so young, that's quite a bold decision to make. I know there are people out there that are, entrepreneurs from the age of 14 and take things through. But when you're looking at that corporate route and then you make that decision to change a different path, that's quite a big mental shift. So what do you think kind of influenced you, or what enabled you to make that mindset change?
Um, Probably my upbringing. Both of my parents were entrepreneurs, so I kind of grew up in an entrepreneurial household. So I'm sure there was, just background messaging there that owning your own path is better than following somebody else's path. But I would say I would say I was pretty disappointed that I didn't get the job because clearly, from my
Yeah.
perspective, I was the best candidate to get the job, right? And so I didn't get the job for a reason that was outside of my control, and I didn't like that. So maybe if you read into that a little bit. I like to be in control, which I think all business owners or entrepreneurs do. But I also think that most people have in my business practice today, helping people find franchises and walking them through an educational process to do that. I've noticed that people outside of business ownership, right, that don't live in the entrepreneurial world, they see people as major risk takers, right? They're jumping off a cliff without a parachute and taking a big risk to start a business. In my experience and what I've noticed with other friends is that true business owners, entrepreneurs are not risk takers. They're very they take calculated risks and they're lifelong learners. So if in looking back on my own path, I only now see the GE experience as the pivotal point towards my path. All I really did is get a corporate job out of college, like everybody else, right? And
Yeah.
I worked and that job was sales and project management. So I sold elevators and escalators for one of the biggest companies in the world. That was pretty cool because big construction projects are cool, right? So, and I also knew that I was pretty good at sales, but not very good at details, like every sales guy out there, right? And so selling, heavy construction is very detail oriented. So I took that job specifically because I didn't think I was good at the project management. And if I wanted to be a successful business owner, I'd have to get good at stuff I was uncomfortable with. So I would say that was that decision started my path to entrepreneurship because entrepreneurs are comfortable being uncomfortable, or they tend to put themselves in positions where they can gain a lot if they get good at something they're not good at, right? And at
Yeah.
least that's and so if I look back, I've done that over and over again, which is why I'm comfortable doing the things that I do now. So um,
It's
first
great.
job was
Yeah.
elevator, project management. Then I got into a hardcore sales job where I like lived in an airplane. I was in my mid 20s. Flew. I had like half the country. So from the Mississippi River to the West Coast, and I was in an airplane every week, and I was meeting with executives and selling interior design and decor fabrication. So for like grocery stores and drug chains like CVS and Kroger. These are all U.S. companies, but think big grocery chains.
Yeah.
And
Yeah.
that was an interesting opportunity. I had a bunch of different jobs lined up that probably would have been a more traditional track, like selling pharmaceuticals or med device sales, which everybody in those spaces make lots and lots of money. But I chose interior design and decor fabrication for grocery stores because I realized that grocery chains run on about a 1 to 2% margin. That's what a grocery store business
Yeah.
model looks like. And I thought to myself, if I can sell interior design to a business unit that makes 1% margin, that's pretty hard to do. So let's give it a shot. So I did that for
Yeah,
a
that's
bit.
that's not classic for most people, especially again at a younger age. They're looking at how can I make money, not how can I make this more difficult for myself. But I guess that's like you say, it ties into that kind of entrepreneurial spirit, being uncomfortable, trying to improve yourself, right?
Yes. The let me not mince my words. If I got good at it, the whole thing was program sales. So if you could sell one store, they would do a test store and then you would roll out to 600 stores, right? So
Got you.
I was elephant hunting and it was very, very attractive, but it took a while to build. And so that was, yeah. I think I like challenges, and that's kind of been the storyline, for better or for worse, right? Like not everything's worked out that great, but that's my story. So
Yeah. Cool. So when did you start to get truly into that kind of entrepreneurial side? What was your first business?
um the first the first business that I thought was my business, I never actually had ownership in. So after the decor sales job, I was actually just getting my stride, doing that again. I was kind of mid to late 20s at that point. My dad at the time was in his mid to late 50s. And I grew up in a manufacturing company. My great grandfather started a foundry. So we melted non-ferrous castings is what we made. So brass, bronze, aluminum, and we ultimately grew that company into an auto manufacturing supplier. So we made intake manifolds, water pumps, for Ford, General Motors, and Chrysler. Um, Long story short, that company got sold off. So I would have been fourth generation in the family business, but we sold it off before myself and my cousins were of age. Um, which was a blessing probably because family business is riddled with cliche, right? So
Yeah,
family
yeah,
business was probably not the track that I wanted to go on. Um, anyway, but so my dad then in his late 50s was looking for a a retirement business is what he called it, and he found this little non-ferrous foundry up in Detroit at the time that I was selling the decor, and he needed some help. This was now 2000 timeframe, and the economy was really hot in the late 90s, and then the 9/11 happened and the Y2K bug, if anybody listening remembers all of that.
yeah.
But that shut down the auto business in America pretty fast. So I call that my real life MBA. So I'm in Detroit and I'm running a full-blown manufacturing facility, melting metal, cutting castings, making deliveries, the whole thing. And my role was basically running the shop, and managing the people, etc. So I did that for about 4 or 5 years, kind of through that early 2000 recession that we had. Um, that's why I call it my real life MBA. We went from about a $5 million company to a $2 million company in about 90 to 120 days. So that was
Wow.
hard. General Motors bankrupted
Yeah.
our three biggest customers back to back.
Whoa. That's massive, isn't it? See, I during that time, I guess I was, um, yeah, kind of in my early 20s, and actually in my world, I wasn't really into business at that point. I was doing kind of manual laboring sort of stuff, and you kind of hear the stories, but never kind of really hit home. But when you hear you kind of telling that story of family business, it's massive, isn't it? You know. For you guys that are running it.
I
So that,
will
that must have
say,
impacted you and your decision making moving forwards, right? As to what you do next.
um, a couple of things. Yes, I would say what I learned from that. I learned a lot in that experience. It was super challenging. So I don't look back on that time in Detroit as a great chapter, but I look at it as very much a great learning experience, and I'm really glad that I went through that, and then I went through it when I was young enough to handle it or to learn from it.
Yeah.
So the long story short is it was challenging, and I used that to learn a lot. So we implemented systems. So ISO quality control process was not in place when I got there. It was my job to implement that strategy or all of those systems. Um, and what I learned from that is what I'm passionate about franchising for today. Again, not really realizing that, but um, and running a business to a system is much easier than running it to what employees showed up that day or what your customer expectations are of you, on the fly. We need a quick delivery on this, etc. So that was a huge learning experience, understanding business in general, cash flow management. I mean, we were upside down pretty hard, because it was the downturn happened so quickly. um, and so the other big piece of that is, as I'm going through this learning experience and I'm realizing that I don't want to be part of the family business for lots of different reasons. Um, and I wanted to raise my kids in the mountains of Colorado because I had lived in Colorado previously. Then I moved back to the Midwest, and I was missing the mountains. And really that's where I wanted to raise my kids, and that's what I did. So about 2004, 2003, 2004, I let my dad know that I was moving back to Colorado and I was just going to start over. And I was sort of formulating what is it that I want to do. And I learned a couple things. I didn't want to do manufacturing. I didn't trust the US government anymore because at that time, late 90s, early 2000, everything was being offshored to China, India, etc. And
Yeah.
even the military, all the US military was making us compete with Chinese companies. I thought that was the dumbest thing we could have ever done. I still think it's dumb, and let's stay out of that. But there's a lot going on there between the U.S. and China, and it started back in early 2000s, and so I knew I didn't want to have any career that could be offshored. So I decided then it was either going to be small business centric or real estate. You can't offshore real estate, and real
Yeah.
estate's a great place to be. And so I ended up finding a small direct lending company, not a bank, but a small lending company that supported small business. And I thought that's pretty cool because I don't know why some businesses get funding and some businesses can never get a loan. Like I just didn't understand how bankers thought. So I took that job. And Peter, the owner of that company, hired me specifically because he wanted to penetrate the franchise space in a non SBA manner, right? He didn't want to become an SBA
Really.
lender, but he wanted to be able to support franchisees to a certain degree, but he didn't really know how. And I thought to myself, well, if I turned around this foundry and did all of that, like manufacturing is complicated, right? So how hard can it be to sell
Sure.
money because everybody needs it? So that's what I did. I took that job. I moved to Colorado, and my kids were like one and three maybe at the time, so really little kids and new reset, start over. And I loved it. I loved underwriting loans. We did all the stuff banks wouldn't do because we were a private lender. So we were a little bit higher price, but not gouging, but also higher risk, right? So I got to see so many cool companies, what they did and how they made money, and ask a bunch of questions. It was super cool. Um, so I learned a lot about over the road trucking. Banks don't typically like to do rolling stock. I learned a lot about landscape companies and tree trimming companies because all of their equipment is stuff banks don't want to finance. But the biggest sector of my business was franchising, right? Because banks don't like to finance startup companies. And so I had to figure out, why would we want to lend money to these certain franchise brands? And so it was my job to learn the franchisors, and to study the business model. So I learned a lot about business modeling and understanding, revenues and expenses, and doing that for, I don't know, 6 or 7 years. I really learned what to look for,
Yeah.
and ratios and things like that. So that was an awesome experience.
So what kind of things were you looking for? Because I find that interesting. In the UK, actually, the banks do support franchising. They like the proven model, it seems to be, but there are other lenders around as well. But I've never really sat down and asked somebody who's lending that money, what are you looking for in the franchise brand, and what are you looking for in the, prospective franchisees. So could you share a little bit of detail around that? What you were looking for at the time?
That's a really great question. So what we learned that was important to us with the lending company, is exactly what we look for in my consulting practice today. So, what I was looking for is, what is the franchisor doing for the franchisee at the unit economic level that
Yeah.
makes an impact on the business, right? And so many people don't know this, but in the US anyway, there's 4,000 companies selling franchises today. I have
Yeah.
relationships
Wow.
with over 200 brands, so I work with a lot of brands, but there are a ton of companies that add a lot of value to a prospective franchisee, and there are amazingly a number of companies that are just garbage. Like they just don't do what most people think franchisors are supposed to do, right? And
Yeah, sure.
so to be more specific, what does a franchisor do? One thing that I was super curious about back in the finance days is why do some companies have franchisees that rave about the franchise and just love it? Think franchise business review. Um, and other companies have lawsuits coming out their ears. What makes that way? What I learned was it's the leadership team and the philosophy of the leadership team on why they're franchising in the first place. So
Okay.
the franchisors that have raving fans as franchisees, they're focused on building a business that is reliant on royalties.
Yeah.
So they're building a good solid foundation because they want that long-term royalty income stream.
Yeah, makes
The
sense.
franchisor, yeah, and that to me is stability, right? And that's the whole reason that some banks, you said banks in the UK like the proven model, right? Well, the proven model takes a long time to build. So the flip side is other franchisors are building the franchise system for other reasons, right? So, for example, there's a lot of money that it can be baked into the cost to open a store that goes back to the franchisor or the cost of buying all of your cups and napkins and things like that, right? So that goes back to the franchisor. So all they really want is to open a bunch of stores, and that's exactly what they do. Have a great story. They sell franchises. They open stores. 3 years later, all the stores close, and everybody's mad, right? So I saw it over and over and over again in the finance space, and I see it today. So you just have to know what you're looking for, right? And why those things are important.
I get so my sort of feeling would be that the some telltale signs are is the franchisor kind of selling that front end stuff and not so much on the support. That might be a bit of a telltale sign. Or if they're trying to force you into buying and they're not reviewing your background and trying to understand what you bring to the table, to the to the business and to the brand. Are they would that sort of sit true with you, or are there other things that are kind of telltale signs?
Um, yeah, the biggest thing is talking to franchise owners and getting a very good perspective on what their experience has been. I think that's the best counterbalance because having been a franchisee myself, and we call that validating. I want you to validate the franchise system by talking to franchise owners and asking them good questions. So, my whole role as a franchise coach and consultant, which is what I do today, is share my personal experience and also make sure that you're asking all the right questions of the franchisor and the franchisee, and that you're gathering information from multiple points of reference, right? So I'm not sure in the UK, in the US, we have a franchise disclosure document, right? Which is a
Yes.
government generated. Do you have the same thing or a similar document?
The regulations aren't in place that every franchise brand has to have it, but some do. And from my experience, I recruited internationally. It's quite commonplace in most countries around Europe, anyway.
Okay, so the we call it the FDD. So you
Yeah,
want to gather information from the franchise salesperson because they're good at I mean, their job is to give you good information. We want to balance that with the FDD, and a lot of people skip over the FDD. It amazes me, right? So I have to slow them down to focus on the information that's in there because the FDD can tell you a great story that you're not going to hear from the franchisor. And so I teach people what I know about that. And in my finance days, that was my first step in evaluating a franchise brand is dig into that FDD and pull out everything out of it that you can before you even start talking to the franchisor. And so that's what I teach people to do. We want to do that early in the process because the contract's the contract, guys. Once you become a franchisee, you're holding to the contract, and good franchisors don't change their franchise agreement, right? They're
yeah.
not going to negotiate it, and they shouldn't, in my opinion. And I'm happy to tell people about that too. Um, but the biggest piece of the due diligence is talking to owners. Are you making money? Are you happy? Is it an easy business to run? Is it fun? Tell me what your day looks like, right? And if you can tell pretty quickly when people are happy or unhappy. So, um, but there's specific ways that you want to ask those questions to get a very clean and balanced picture on what the opportunity really looks like. And that's what I get to do today, is help
Yeah.
people find that picture or see that picture as it really is.
Yeah, makes a lot of sense. So I want to sort of drag us back to your career then. Just dive into that bit where you were a franchisee yourself. So tell me a bit about the brand and how you made that decision to invest in a franchise. I mean, were you following the same advice that you give today, or did you make some mistakes along the way? I'm guessing maybe yes.
Oh yeah, I think today I've owned maybe 7 to 9 companies. It depends if you want to call a holding company a company. So holding companies and operating companies. Today I invest in franchise assets, real estate assets, and I also do the franchise consulting. So how did I get there? Here from there. So if I go back to my career, worked in the foundry business, then I went to the finance company. That was a lot of fun until 2008, right? So the financial meltdown
Yeah,
of that we experienced in the United States because of the mortgage crisis and all of that severely impact the lending space too. Because our bank, we had a line of credit that was, I don't know, 15 to 30, maybe 15 or 30 million, I can't remember. And then in 2008, they evaluated our portfolio and the loans that we had on our books, and they moved it from whatever it was. Let's say it was 30 million. They moved it to 15 million, or 15 million to 7 million. I can't remember, but they cut it in half.
right.
And they cut it in half because I was very successful at lending money to startup companies, and they didn't like that at all. Right. So everything got, and again, this is a little bit like the GE thing, because something completely outside of my control drove me out of a job essentially, right? So
Yeah,
again, once I got over myself and being disappointed, I didn't get fired, but the let's just say that the opportunity was significantly altered, to the extent that I was pretty offended. And so I had lots of relationships with banks. I had lots of relationships with franchisors, et cetera. So I spent most of 2009 underwriting a business to buy, or looking for a business to buy. So I looked at, I think, 19 companies in 2009 and early 2010. I looked at bank owned assets. I looked at private equity deals. I looked at finding an angel investor, because let's be honest, in 2009 I didn't have a ton of money, and all of my money was tied to the finance space. But I had resources, and I had and so that was kind of my mentality. So I went out and I looked at a $50,000 pizza shop that was a franchise, and a $10 million liquor store that had real estate attached to it, that the bank owned and wasn't running very well. So kind of looking for turnarounds. Um, by October of 2010, I guess at the same time I was doing that, a lot of franchisors were looking for new salespeople. So I was getting a lot of, "Do you want to be the vice president of sales?" And a friend of mine who was in working for as a franchise consultant said, "If you're going to sell franchises, why wouldn't you work with 200 brands instead of just selling one concept?" And I thought, that's pretty interesting. Tell me more. Didn't know anything about franchise consulting at all. And so fast forward to the end of 2010, I bought a bar on DU's campus because I knew a guy that owned a bunch of, he owned 6 Subways and a couple of smash burgers. And he had this idea of running multiple brands, multiple units. So I think in total he had like 13 units. And then he had this idea of buying and turning around bars and pizza shops. So
okay.
any underperforming restaurant that was had a liquor license is what we were targeting. So I went into business with that guy. We bought a bar on Denver University's campus. So the location was good. The story was good. Buying they had 3 owners. Two of them were alcoholics. The third one was pulling his hair out because he was frustrated with the scenario. So it was underperforming for good reason. Um, and I owned that bar for 45 days, and I learned a lot. If you're going to invest in something, you need to be very involved in the underwriting of that investment, which I was not. If
Right.
you're going to put your money on the line, you need to understand all of the moving parts. And so let's just say that was a good learning experience, but a really poor investment, and so bad, in fact, that I just pulled out 45 days into it. I was like, this is the craziest. Once I learned more, like every week, I was like, I can't believe that we didn't cover that base or whatever. So, and the long story short is we bought the business, but we didn't have the landlord lease agreement in place. So we had no lease. They
Right.
controlled the lease
Wow.
and the location. I was like, well, then we didn't buy anything. This is just crazy. Um, so all of that happened. Financial meltdown pushed me out of my job. I sort of found my footing again, in about 6 months or so. And the bar was a terrible idea, and franchise was a wonderful idea. So sometimes you win and sometimes you don't. So that was 2010, 11. I'm starting to get my legs. By 2013, I was ready to invest. So my wife and I invested in Elements Massage, two locations of Elements Massage that were operating, but not optimally. So we bought those, built those up, and sold those in 2017. And then my wife kind of decided that she wanted to go non-franchise. She wanted to create a med spa. So in during COVID, she got her esthetician's license because we were going to buy a med spa, um, or start a med spa from scratch. Um,
Okay.
and that didn't happen. So then I invested in a pet franchise with some partners in California. So that kind of brings me up to today. Always been
Yeah,
doing the
that's cool.
franchise consulting, but also doing the investments as we go.
There are bits as you go. Yeah. So, as a franchisee, what was the most valuable piece of support or help you received from the franchisor?
Oh, that is that's actually a focus that I have my candidates look for. And I like to break it into systems and support, right? So what are you buying when
Okay.
when you pay a franchise fee, or you buy into a franchise? And I like to keep it simple. The franchise system, proven model, etc., is what you're buying when you pay a franchise fee. That's the way that I like to present it. And then the royalties that you pay every month, whether you like it or not, you're going to pay them royalties. So I like to equate that to the support structure that you're getting from the franchisor.
Yeah, I like that.
And the reason that I give that advice is that was my experience with Elements. I think Elements was a good franchise, but not an awesome franchise. And today, they 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 all evolve. Every franchisor evolves, right? So um, as a franchisor is in a different growth period, they're better or worse than they were, at different stages. And so when we owned Elements, I think they had 140 locations when we bought, and they had about 270 when we sold, which is a great place to be as a brand in the US, as a brand is getting national brand recognition. And that's sort of how the numbers shake out. It's more detailed than that, but just for the purpose of today's call. And
Yeah.
so the best thing that Elements did for us in that experience was they had really good systems. Their technology stack was really beneficial. They were constantly improving it. They kept getting better and better with their marketing, um, data centric marketing campaigns. And back then, to be fair, like the whole digital marketing and social media marketing was really just sort of getting its legs. A lot of people were already doing it, but like most people were figuring it out. Today, it's like that's where you put all your money, right? Because you have a lot more data to make decisions on, and we were sort of learning as we were going on that front. But I would say that the support structure was not great. the culture at the corporate office was pretty interesting.
Yeah.
We had a lot of turnover in key positions at the franchisor level, right? And so all of that impacted decisions they were making, which then trickled down into things that we had to buy, or, think of different marketing campaigns or whatever. Well, now you got to buy all the collateral that's in the store, and you got to buy, window clings and all kinds of different stuff. So, um, today I take that experience, some positive, some negative, and I just shine a light on it, right? Like, these are the things that you want to be thinking about, because um, it's going to impact how you feel about running the business or your partnership with the franchisor. Does that make
Yeah,
sense?
I think yeah, completely, and I think you kind of have to attribute it in that way, like you said. So I've tended to describe it as, it's the training, the ops manual. It's this kind of, like you say, the system that you're buying into with the franchise license. And I think, referring back to what you said earlier, the franchisor really shouldn't be making a big chunk of profit on that upfront payment, right? Because otherwise they're incentivized to just keep on selling those licenses. And it's that managed service fee that is where the support comes in. That's what it's going towards, and it's where their profit is. So that it's they only win if you win kind of mentality, right? But what I
Yes.
think what I've kind of looked at is, the smaller that royalty fee, it might look attractive when you're running the business, but I would anticipate that the support is going to be less, right? Now, you've been in this world a lot longer than I have, so I'm wondering if that's a trend that kind of holds true.
You bring up a very good point. So as you're evaluating the FDD, all franchise brands have different service fees. They have a royalty payment, et cetera. And so I like to show people multiple brands and then compare and contrast. And and as we're evaluating the FDD, or the franchise agreement, it maps it out, like technology fee is this, and going whatever the different fees are, and royalties. And so you can do a quick analysis on, this company charges 7% royalty, this company charges a 5% royalty, this company charges $100 technology fee, this company charges a $1,500 technology fee a month, right? So
Yeah,
$1,500 a month is a lot of money for technology. Um, but what I get people to look for is, you need to uncover what the value is, right? What is
yeah,
the value of the $1,500 technology fee versus the $100? So the example that I always give, if all the company is doing is giving you a branded email address and a web page or a landing page on their website, and they charge you $100 a month, like GoDaddy is like $15 a month. Like, you don't need a franchise to do those things for you. It's super cheap to do that. You can get a
yeah,
Google Gmail account and brand it yourself. You just don't need that. Um, and or $1,500 a month could be remarkably a good deal. So the example I give, in 2013, Elements charged a $165 technology fee a month. By the time we sold, the technology fee was $475. The $475 was absolutely awesome. I was so happy to pay that, because the technology stack was so much um, better, right? And everything integrated. So this system integrated with that system, and we could pull reports. And so the depth of understanding of how you're going to make a decision was really great. So that's really the focus, is not what the cost is as much as what's the value that comes out of what you're paying for. That's also a philosophy of mine. Some people, like, you start everything as cheap as you can go and you figure it out as you go. That's okay. That's just not the way that I look at it.
yeah, sure. So, in your role with FranChoice and your business, Franchise Your Freedom, so you're obviously speaking to a lot of individuals on a daily basis who are interested in perhaps investing in a franchise brand, right? And we've gone through some of the details around what to look for in those franchise brands, but what should people be looking for in themselves? How can they spot whether they are somebody who is needing a lot of support, or somebody who just needs the right system to go forwards? how can they kind of look internally to find, what they actually need moving forwards? Is that something you help them with as well?
Absolutely. Yeah. So I we touch on this multiple stages of my process. First one is sort of skills and abilities. What are you good at? What are you not good at? What do you like to do? What don't you want to do? And really, what I'm looking for there is if you have, a cold calling aversion, like the 1,000 pound phone, right? And you're not going to pick up the phone, then I need to know that so that we don't put you in a sales driven customer acquisition strategy, right? We want to focus
Yeah.
more on a marketing driven customer acquisition business, because some businesses are just more sales driven. Think of painting and gutters and roofing. You're going to go to somebody's house and do give them an estimate. Whereas, elements massage, massage, beauty, fitness, those are membership based business models, right? Think Orange Theory Fitness or Massage Envy, whatever. Those are marketing driven. They take longer to ramp up, but they're also become very stabilized and really fun businesses to own in the third to fifth year. So, that's my personal experience, and also my advice is you can't expect these things to be cranking money right out of the gate. That's just not the way it works, right? So,
Yeah,
um,
sure.
what are people looking for in themselves? We want to understand what are they good at, but also I like to do later in the investigation as they're looking and evaluating brands. I want them to do a self assessment on what are their leadership skills, where are their weaknesses, and we go through this exercise to kind of identify some of those things so that they can then hone in on their weaknesses and look for the strength of the franchisor to balance that, right? So I think franchising is very much a partnership. It becomes a partnership if you value the other partner, right? So the franchisor is looking for you to grow a great business, and you're looking for the franchisor to support you where you're weak, right? So we see this in marriages, we see this in good business relationships. If we don't value what our partner brings to the table, and I'm in a partnership right now, um, in California, I've mentioned, and I'm looking for that. So what is Chris going to do better, and what are the things that I don't want to do because Chris can do those for me, right? And same with Leo on the other side. So I get that thought process down to my candidates so that they can ask really good questions about the stuff that they're weak in and identify, does the franchisor actually help me with those things that I'm weak in? And if the answer is yes, it's a good opportunity. If the answer is no, it's probably one you should pass on.
Yeah, that's a really good point, actually, because I think a lot of people tend to focus on their strengths. What am I good at, and how can I maximize those strengths? But by doing that self assessment, by drilling down what actually are my weaknesses, and finding that brand that matches, that provides support in those areas, I think that's valuable. So yeah, definitely. If anyone's listening, sit there and work out your weaknesses. It's probably one of the best strategies. Yeah, I really like that. That's good. So,
Excellent.
couple more questions before we kind of roll on to my kind of last few. But I'm wondering if you're seeing any particular trends at the moment in any types of franchise brands. Are there any that are performing better than others in your eyes?
Great question. And the answer is yes. We've seen a lot of interesting, this whole COVID pandemic scenario turned the world upside down. And so, what I used to say in 2020 is what used to be sexy became unsexy, and what used to be what was non-sexy became sexy. So from 18 to 20, I would say, boutique fitness was super hot, and food concepts, etc., back in, 16 to 18 to 19 timeframe. And then companies like gutters and roofs and
Yeah,
handyman services, like nobody wanted to buy a company. If you have a corporate job, would you buy a gutter company? That seemed like counterproductive. Like, who would do that, right? But people were investing. The consumer was changing their buying behavior. We're not going on fancy vacations. We're not, doing, and all that money went into our homes. The real estate values were going up. And so that was a really smart move. And those franchise brands in the home improvement sector, and there's just a ton of different franchises in that sector, the numbers are outstanding, like really, really good, and they continue to be strong. It's amazing how the growth in that sector has gone.
I,
Um,
I actually
but
think
I
it
would
goes a
say
little
coming
bit beyond that, though, doesn't it? Like rather than just home improvements, home services as general, because I think people started to value their time more in COVID, right? And realized actually, do I want to do the gardening? Do I want to do the cleaning all the time when I could pay
absolutely.
someone $30, £30, a week to do it for me or whatever it is, whatever the cost is, you know? So yeah, that's a
That's
good point.
exactly what we're seeing today. Yeah, what we're seeing today is the consumer change their behavior again because of um they're either working from home. A lot of people stayed at home. A lot of people are moving. But you're absolutely right. The mentality of what am I working so hard for, and what am I going to do with the money that I have has definitely changed. And so, if your question is where do I think the hot segments are going forward 2022 2023, I think self-care in lots of different ways is where the action is. So um in the US we have a lot of very cool new technology. Everybody likes technology, everybody likes cutting edge
Yeah,
emerging brands, and those look like restorative health and wellness things. So there's all kinds of different stuff, and I won't go into. But think cryotherapy, think med
yeah,
spa, but med spa that's more like health and wellness type stuff. Fitness is back on track. Like people are very focused on fitness again because people want. They realize that it's up to them. Their health and wellness is up to them, right? We're
yeah.
not going to rely so much on the doctor. Lots of conversation around vaccine or not vaccine, right? And there's lots of new data coming out about that. So people are owning their health and their wellness, and they're willing to spend money to make that happen. So um, mental health is a really big thing in the US. I would imagine it's probably pretty similar in the UK. And people are focused on that.
Yeah, I'm certainly noticing it from my side as well. There seems to be more brands that are franchising that are in that space, whether it's intravenously inserted vitamins or mental health coaches or something like this. There is a lot more being put into that healthcare side for sure. Yeah, definitely. I'm seeing it in the UK as
Absolutely.
well. Okay, so a few more questions then, and I'll let you carry on with your day, David. But the first one is, um, have you got any funny, strange, or weird stories that you're happy to share with us?
Yeah, I would say it's funny now, but it wasn't funny when it happened. So the story I'm going to share with you is my first franchise experience. So I'm with the lending company, and I used to give presentations on financing, like smart ways to finance your company and different strategies on financing the company. And so they invited me to their annual conference, and I was like, well, that's an honor. That's pretty cool. Don't know what an annual conference is. Everybody that's in franchising knows that they bring vendors in, whatever. So they asked me to present, and I was like, okay, I can do that. I'd been going to Discovery Days or Meet the Team Days as a presenter, and so I'm presenting in front of 20 to 50 people, and that wasn't a big deal. Didn't quite appreciate the annual conference had like 550 people there. And I was on stage with big lights, and I came right off the heels of a former NFL star, you know, does public speaking, very professional, really great presentation. And then we pivot to financing, like what a boring topic, and rookie, serious rookie. So I get up there, and I'm prepared. I know what I'm going to talk about, and they get up there and ask me to start, and I had one of those tunnel vision panic moments where this I realize I'm in front of 500 people, big bright lights sitting on a stage, and I absolutely froze. I completely lost my train of thought. It was absolutely embarrassing, and I was like, this is the beginning and end of franchising for me, and
Oh,
it was
nice. You
just
properly
horrible.
bombed.
I told her, yeah, yeah, I hated it. So, yeah, it was a good learning experience, but, yeah. I say today, sometimes you win and sometimes you learn, right? So, that was a tough one.
Yeah, I can imagine it. And like you say, if you're following somebody who's so adept at that sort of situation, and that's probably a small crowd for them, maybe, especially if they've been on the big stage in NFL. They're used to being around a lot of people, all eyes on them. Yeah, must have been a tough act to follow. Sorry, sorry to hear you had
Yeah.
that situation, but it sounds like you've come through it and learned something, which is always a great positive, right? So I guess then, to the flip side to that, then it'd be interesting to know what kind of proud moments or inspiring moments you've had in your career.
Um, I would say a proud moment. I don't know if this is a career proud moment, but when we bought our Elements massage business, we took over an underperforming store. There was a whole bunch of story behind this, but which doesn't much matter. It took us a while to learn how to hire the right therapist, massage therapist, and so in the early days, we had, I think we went back, we had really good software driven payroll HR service company. And so we went back and did the data. We had a 350% turnover in the first 90, 120 days, which is really,
Yeah,
really
wow.
uncomfortable. But it also gets you to learn quickly. So the proud moment is the kids at that time were like 8 to 10 years old, 8 to 12, and so they decide, hey, we're going to do a lemonade stand and this, that, and the other. And so I was all excited and helped them build their lemonade stand, and got out there. One kid was going to be the advertising, and one kid was going to be the lemonade maker, and et cetera, right? And so we established a budget, and the cups and all the stuff, and who's going to do what. Um, so they're off doing their lemonade thing, and my daughter comes in, and she was like, had this long look on her face, and she's 10, right? So
Yeah.
I said, "How's it going?" She was like, "Well, I had to fire Andrew, who was the kid that lived down the street, right? He was the neighbor kid that just was bored hanging out." And I started laughing. I said, "You had to fire Andrew. Tell me more." And she was like, "Well, he was drinking all of our inventory and he wasn't really helping." And I started cracking up. How does my 10-year-old, so this is the proud moment. How does my 10-year-old use words like inventory and firing employees and et cetera? And I was
Amazing.
like, the kids absorb everything, right? And they're listening. So that was a proud moment because I realized that you can teach your kids a lot about your experience without even thinking that you're teaching them as you're building a business.
Yeah, that's so cool. I think it really ties into something, a trend that I've noticed from speaking to a lot of people around franchising, and it's that when you're around other people, other entrepreneurial people, it becomes almost like part of you, but you are the people that are around you, right? You hear that all the time, but I really see that. So
Yeah.
your parents before you were entrepreneurs, and your daughter now showing signs that she understands some of the terminology and can use it in the right way. And she was right to sack him, by the way, totally right. If he's drinking all the inventory, she's making
Isn't that
good
funny?
business decisions at early days, right? And I think that's
Exactly.
something else that I think a lot of people that want to make a transition from the corporate world, or whatever it is that they're doing, that's employment. I think they need to surround themselves with people that have entrepreneurial experience and can talk to them just generally about what they're doing, and that rubs off and helps them. And I can see that's where there's a lot of value in speaking with a consultant like yourself, right? Because the more time they spend with you, the more they start to see how you think about things, how you treat those risks. And I think that's really important. And I think your daughter's just a prime example of how easy it can be for people to pick up from just being around the right people.
You make such a good point, Ed. And I actually spend more time, I don't really think about it this way, but I spend more time helping people I like recognize the paradigm shift that they need to make in their mindset, right? Because if you've spent 20 or 30 years in corporate America, then you're surrounding yourself with a bunch of employee minded people.
Yeah.
And so if you want to go outside of that, like you're breaking like an unwritten code, right? Like if you're corporate America, you bleed blue or whatever. And so because everybody around you is doing the same thing, and if you want to step outside of that, um, you need to think differently about your career, about what's important to you, and your spouse needs to also make that shift and adjustment, right? And if those things don't happen, you're probably going to stay an employee and not become a franchisee. So we talk a lot about mindset, and that mindset does change as you're around other entrepreneurs. One of the things I love about franchising is the peer network. So we think about
Yeah.
the franchisor and what they're doing to support, but our peer network, other franchisees that are running the exact same business with the exact same kind of employee, with the exact same marketing campaigns, et cetera. Like, how valuable is that? Ed, what are you doing with your digital marketing? Well, I tried this, but it didn't work. I spent $15,000 and it was a waste of time. Well, that's super helpful. Thanks, Ed.
Yeah.
Right? Like,
Yeah.
love franchising for lots of reasons. That's just one of them. But
Yeah. It's one of
surrounding
my
yourself
favorite
with
reasons as well, for sure.
that's awesome. It's so fun. It makes business fun when everybody's trying to do the same thing together. So
Yeah. Excellent. I agree completely. But I'm going to ask my final question now, and I'm interested to see what you think because you've got a lot of different bits of advice you've given us so far, and all really valuable. And I think I'd find it difficult to pick just one. But if you would give somebody that one killer piece of advice that would help them to make a decision whether to invest or not in a brand, or even to go in franchising altogether, what would that one piece of advice be?
I would say that's a tough question because there's just a lot of different things to think about. Um, I would say that a lot of people thinking about getting into business focus on what the business is, right? I want to sell pizza. I want to do workouts. I want to own a yogurt franchise or ice cream. Who cares?
Yeah.
That's the center. Like, I want to be in the ice cream business. And so, my biggest piece of advice would be focus on the leadership team. What have they done? How did they do it? What is the business that have they built a franchise brand in the past? Because a lot of the good franchisors do. They build them up and sell them off and start a different one, et cetera. And so then the question is, how do they do that? Well, they do it because they understand the fundamentals of what make a business model successful, right? And so in my practice, I tell people, I'm going to teach you how to look at the franchise space like a business investor so that we're not shopping for our franchise like a consumer. So there's a bunch to that, but the focus on the business model itself and also focus on the leadership team because the leadership team is going to take you to where you want to go. And the business model and the what the business is doing is really what you want, right? The a bit and from my perspective, a business is the vehicle that's going to take you and your family where you want to go in life. It's not the thing that you're selling,
Yeah.
if that makes sense.
Yeah, no, I think that's spot on, and I think that's really good advice. I think you have to have full trust in the leadership team that they're going to be able to take you to where you want to go. And yeah, I love that as advice. So, David, thank you so much for your time today. It's been a real pleasure getting to know you and to hear your advice and your experiences to share with my audience. So I really appreciate it, and feel like we could have gone for another hour or so, to be honest with you. But yeah,
Thank you
thanks
for
again
having
so
me,
much
Ed.
for your time, and have a great day.
Thank you. It's been great. I appreciate being on.
Cheers.